Okay, good evening, everyone. Today we'll see about IC 02 Chapter 11. So I'm sharing my screen. Hope you should see my Word file. Okay, so Chapter 11 is basically about policy claims. So what is policy claims? Policy claims are like you take the policy, and the end of that policy we'll have claims. It can be anything. It can be a death claim, it can be a maturity claim, it can be a survival claim, it can be a bonus claim or a raider claim, whatever may be. A claim is something you are asking the insurance company to give the benefit. This is called claim. So you are already paying premium for them to make their promise true. So it is their duty to pay back the benefits when the claim arises. The benefit of each policy is a claim. So claim, we have various types of claim, and we are going to see about how the claims are being applied and approved and what are the documents that should be submitted along with each and every claim. So it is very simple and straightforward chapter. No calculations, nothing much, because we have seen all the calculations related to this policy and chapters before itself. So it is very straightforward. If you have read all the chapters before, this is very easy. So policy claims. The claims are demanding policy money on happening of the insured event. This insured event is important. You cannot just go and ask for money from the insurance company. They are not going to give it. The insured event should happen. Insured event means for term insurance, it is death of that policy insured person. For money back, it is the completion of the tenure of the policy. So that is the insured event. So insured event should happen. Then only you can go for a claim, and you are demanding the money, and they will review the terms and policy conditions. Everything they will review, whether you have paid the premium correctly, whether it is paid on time, whether there is any pending things, whether the policy in force or lapsed, everything they will review, and they will pay the claim. If not, they will say we are not going to pay the claim, and they will send a statement regarding why they have denied the claim. After that, you can, if you are not happy with the claim process, you can go for appeals. So this is basically all thing about claim. So there are three key questions to examine at the outset of any claims. First, they will check whether the policy is in force or it is a reduced paid up policy. You should know this reduced paid up policy we have already taken in the previous chapter. Reduced paid up policy means, in the term, like if you have taken 10 years insurance, uh, if you have paid for 3 years and if you are not paid for the remaining years, that policy will change into a paid up policy. That means 10,000, for example, like 10 lakh rupees policy you have taken, and you have paid, that is for 10 years, and you have paid the premium for 3 years. That is each year 1 lakh, 1 lakh you have paid, 3 lakh you have paid. After that, you are not paying. You are saying you are not paying. So we cannot close the policy. That time they will make into a paid up policy. That is, they will change the face amount. They will reduce the face amount from 10 lakhs to 3 lakhs, whatever, like the total amount of premium you have paid, plus any addition of bonus uh, accumulated. All these things they will total it up, and they will make that as the sum insured. So reduced paid up policy is reducing the face amount to a lesser amount because you are not paying the premium. So they will check whether it is policy in force, whether you are paying the premium correctly or it is a reduced pay up policy. After that only they will pay. You cannot just go and pay claim 10 lakh rupees on a paid up policy because already the sum assured is reduced. Has the contingency insured occurred? Contingency insured occurred means that actual event. If you have had fire insurance, the fire should happen. That is the event. If it is a death policy, death should happen. If it is an accident policy, accident should happen. So this is the contingency event. So it should happen, then only they are going to pay. First, they are going to check whether the policy in force. Second, whether the actual event, insured event has happened. Then third, they will check is the claimant the person entitled to demand the performance. That is, if you are applying for the claim, they will check whether you are eligible for that one. No, you cannot go and apply for some others insurance policy. You should be the beneficiary. If you are the beneficiary, you can go and apply the claim. So they will check three things majorly. One is whether the policy in force, every premium paid correctly. Second thing, whether actual event has happened. Death means death, accident means accident. You are the beneficiary. They will check whether you are the right person to receive the benefit. This is the major three questions they will check in all claims. Any questions so far? Okay, we'll go for type of claims. Type of claims, as I already told you, simple: maturity claim, survival benefit claim, death claim, rider claim. Four types. Maturity claim means you have applied for this happens in terms of in endowment policy. Endowment policy, that means you are putting endowment policy for 10 years. They are saying like if you are surviving after 10 years, I am going to pay you the amount. So 10 years you are alive. After 10 years, you are claiming the amount from the insurance company. So this is called maturity amount. So they will pay the sum assured plus bonus, whatever the bonus has incurred. They will, if you are surviving after the full term, they will pay this maturity claim. Second thing is survival benefit or periodic payment. This is money back policy. Some policies are there. So if you will take insurance for 20 years, they will say every 5 years I will pay some amount, like 5 lakhs amount every 5 years I am going to pay you it out. So this is called periodic payment policy. This is money back policy. In terms of pension policy also it is there. So it is not, they won't wait till the 20 years of the terms. In between itself, as they promised, they will pay the amount every 5 years. So you will receive 4 times payment if you are taken for 20 years policy. So this is called survival. So everything you need to claim it. Claim பண்ணாதான் உங்களுக்கு amount வரும். So death claim. Death claim is very simple. Term insurance. The insured person died. The beneficiary go and claim to the insurance company. So this is called death claim. Rider claim means along with a main policy, there will be some riders. Critical illness riders, accidented death benefit rider, accelerated death benefit rider. All the riders are there. So if there is a rider, for example, 10 lakh rupees is the insured amount, 5 lakh rupees is the rider amount. If you are claiming, they will pay the 10 lakh rupees plus 5 lakh rupees from the rider. So this is called rider claim. This is all about types of claim. Any questions? Okay. So death claims. We'll see about different types of claims and what are the procedures to do a claim. So death claim means you need to first inform the insurance company about the death of the insured person. So that is the beneficiary, the main policy owner or the who has been insured has been died. So he cannot claim. So the beneficiary need to go and claim the amount, inform that that person has been died. So I am claiming this thing. So in death claim, there are two things. One is early, one is non-early. Non-early, early has different names. Contestable claim, non-contestable claim. This contestable is a unique word for the insurance company. You should remember this. Contestable means you can investigate. Non-contestable means you cannot investigate. So contestable period is 3 years. Very important. 3 years period in India. Okay, it varies with different countries. So in India, if you have taken an insurance policy now, 2026, till 3 years, like till 2029, if any claim is coming, the insurance company can do a full investigation of the claim. That means if you're saying that person has died, they can check whether the person has actually died because of new disease, or if the person has some other disease earlier. You have hidden that information when you're taking the policy. Everything they will check in terms of contestable claim. That is called early claim. Early period is 3 years. If something is happening after 3 years, they cannot contest a claim. They cannot do the investigation, even if you have done some even if you have cheated some information, they cannot deny a claim or investigate a claim after 3 years. So this is called non-early claim. Non-early claim after 3 years, normal settlement process. Early claim before 3 years, they will do a full screening, full scrutiny, full investigation about the claims. So the early claims, the insurance company, not the insured person, the insurance company is responsible for doing the claim. If they want to do, you do it on your own, on your own cost. So they will do it on your own cost. Okay. So this is an exam question. Early claim, death within 3 years, non-early claim after 3 years. What are the documents required for non-early death claim? Non-early death claim means after 3 years something has happened. Straightforward claim. You submit the original policy document. Now everything is online. You will have a mail copy. So discharge form is the claim form duly completed. You should complete it, sign, stamp, and there should be some witnesses. Claimant statement. If you are the claiming person, you should give the statement. How the causes, how the death has happened, what is the nature of illness, why the death has happened. You should submit the cremation and burial details. Okay. And proof of title of claimant. If you are the claimant, you should submit your proof. That is, you can submit that you are the same person. You can submit your Aadhaar card, your license. There are a lot of proofs, ID proofs available in India that you can submit. Then original death certificate of the person who has died, that we need to submit, and we need to submit the bank details. So they are not going to pay in cash. So they will pay it in to your bank account. So you need to give the bank account where the claim money should come and settle down. So it is straightforward. Non-early claim, policy document, claim form, claimant statement, then your ID proof, claimant ID proof, original death certificate, then bank details. Only 6 items. If the death occurred due to accident or unnatural cause, okay, for that all these 6 items are required. In addition to that, we need post-mortem report. Post-mortem report should say this death has happened due to accident. Okay. If it is a murder, then it is a different story. Police investigation report. Okay. So for PIR and PMR, these two things are mandatory. If it additional documents that you should submit, if it is a death due to unnatural cause, then Pachanama report from police authorities. Okay, so they will give from the police, police station. So these 3 documents are mandatory. Then we can see about claim concession. Claim concession is, so, there are, they are not going to be very strict on claims if you're not paying premium. So there are some concession. There are some flexibility. Even if you are not paid some premium for 1 or 2 years, for example, if you're taken a policy for 20 years, you paid for 10 years. Okay. And 11th year and 12th year, you forgot to pay the premium. But the event has happened. For example, death claim, death has happened. Okay. On 12th year. For the last 2 years, it is not paid. It does not mean that you are not paying the premium, that insurance has lapsed, the insurance company is not going to pay the claim. There are some concession flexibility that insurance company will give still, because you are paid for 10 years. It's just 2 years it's lapsed. So we'll see about what are the concessions or flexibility that they are giving. If at least 3 full year premium paid, okay, subsequent premium unpaid, and death occurs within 6 months, 3 years you are paid, and after 3 years, first month you didn't pay, second month you didn't pay, third month you didn't pay, and something happened on 5th month. Okay. So death claim will be settled in full. They won't reduce anything. even if you miss to pay 3 months premium. Okay, this is the rule by IRDAI. No insurance company can deny that. Extended claim concession. If at least 5 years paid, 3 years paid means 6 months flexibility period is there. If you paid 5 years means 12-month flexibility period is there. This is also an important question. 3 years, 6 years is the concession period. 5 years means 12 months is the concession period. So after 12 months, within 12 months something is happening, they are going to pay the death claim in full, whatever claim in full. Okay. So claim concession does not apply to riders. Riders and all you cannot include. Only for main policy it is applicable. For rider, if lapsed means lapsed only. We cannot, recover that. And it does not apply in case of suicide. So this is very important question. 3 years means 6 months. 5 years means 12 months concession. Presumption of death. Presumption of death is assuming death. That means ஒருத்தவங்க வந்து காணாமல் போயிட்டாங்க. ஒரு ஃப்ளைட் ஆக்சிடென்ட் நடக்குது. அந்த ஃப்ளைட் ஆக்சிடென்ட்டில் அவங்களுக்கு பாடி கிடைக்கல, அவங்க இறந்துட்டாங்கன்னு எங்களால் ப்ரூவ் பண்ண முடியல. திஸ் இஸ் கால்ட் ப்ரிசம்ஷன் ஆஃப் டெத். பட் வி ஆர் அசியூமிங் இன் தட் ஈவெண்ட் சம் பர்சன் ஹஸ் டைட். சில பேர் வந்து காணாமல் போயிட்டுருப்பாங்க. ஃபார் எக்ஸாம்பிள் இன்னைக்கு காணாமல் போயிட்டாங்கன்னு வச்சுங்க ஒருத்தவங்க. அண்ட் we have filed an FIR, we are searching for that person, and if person is not, we cannot find that person itself. So at one point of time, we are assuming that person is died. So this is called presumption of death. So what are the scenarios we are going to presume death? So this comes under section 108 Indian Evidence Act. Person not heard of for 7 years, they are presumed death. நாட் ஹர்ட் ஆஃப்னா ஒருத்தவங்களை 7 வருஷத்துக்கு நம்மளால் கண்டுபிடிக்க முடியல காணாமல் போயிட்டு அப்படின்னா கவர்மெண்ட்டே வந்து கோர்ட்டே ஒரு சர்டிஃபிகேட் கொடுத்துரும். திஸ் பர்சன் இஸ் டிக்ளேர்ட் டைட் அப்படின்ட்டு. தட் இஸ் கால்ட் presumed death. So what are the things we need for adequate proof of death if we are need to presume death? Natural death. Natural death means certificate from panchayat or municipal office of cremation or burial certificates. This is easy. Okay, straightforward case. Natural death, they have buried you or they have done all this last rituals, then you are going to submit the certificate from the panchayat. So this is called natural death. Accident, it can be happen in air travel, flight travel, airlines travel, or natural calamity. In flood also somebody has disappeared. So these are all called, it can happen in any case of this event. Flight accidents, rail accidents, or natural calamity. So in this situation, if you are unable to recover the body, you need to get the certificate from carrier or the authority certifying death. For example, Air India made a crash. So you need to get from the Air India that person has died. They will check the boarding pass and they will give the certificate. So that certificate is needed. Okay. Life assured, missing on a ship. So ship is different. So shipping, if a person is missing on a ship, but ship drowned, you need to get the certificate by the captain of the ship or the shipping company. So presumption of that, nothing has happened, but somebody gone missing for 7 years. Then you need to get the order from the court under section 108 that this person is missing. So you need to declare him death. So this is a legal proceeding. So this is all about presumption of death. Any questions? Okay, we'll go to the next chapter. Section 45 of Insurance Act 1938, policy not to be called in question. Okay, this is again we are talking about policy not to be called in question. And the question, the policy நீ investigate பண்ணக்கூடாது அப்படின்னு சொல்றது தான் policy not to be called in question. இதுதான் நம்ம ஏற்கனவே பார்த்தோம். That is called contestable period or early claim. So up to 3 years you can call the policy in question. After 3 years you cannot do anything. You need to pay the claim. You cannot go and investigate. So after 3 years from the starting of the policy, commencement, revival or rider addition, insurance company cannot repudiate the claim. Repudiate the claim means cannot deny the claim in terms of grounds of misstatement of suppression of material fact. நீங்க ஏமாத்திட்டீங்க, ஒரு டிசீஸ் இருக்கிறதுன்றத மறைச்சு பாலிசி எடுத்திருக்கீங்க அப்படின்றத ஆஃப்டர் 3 years கழிச்சு ஒரு டெத் நடக்குதுன்னா you cannot decline the claim. You need to pay it. That is the rule. Before 3 years, if something happened, death happened means insurance company can go on, investigate the claim, and if they find that you have suppressed some material fact, you had some disease, ஒரு CAD இருந்துச்சு, அந்த CAD-ஐ நீங்க மறைச்சு இன்சூரன்ஸ் எடுத்துட்டீங்க, இப்போ ஹார்ட் அட்டாக்னால இறந்துட்டாங்க அப்படின்னா they can still investigate and they can deny the claim stating that you have done some kind of fraud or misstatement. So burden of proof is on the insurer. The insurance company has to prove that you have given a false statement. That insurance company has to prove that you have given a false statement. Okay. So this comes under section 45 also. This covers revival and restatement. New policy, any restatement policy, any revival policy, the contestability period is 3 years. For example, what is revival and reinstatement? So new policy is straightforward. You have taken a policy in 2020 up to 2023, nobody can deny, they can investigate a claim. After 2023, they cannot deny a claim. But what is reinstatement and revival? So you have taken a 20 years policy on 2020 till 2040. Now up to 2025, you have to pay the premium and the policy lapsed. And 2 years you forgot to pay the premium. Now you are going and approaching the insurance company that I need my policy back. I will pay whatever due premium now. எல்லாத்தையும் நான் என்னென்ன பெண்டிங் ப்ரீமியம் இருக்கோ கட்டிடுறேன், என் பாலிசி திருப்பி ரீஇன்ஸ்டேட்மெண்ட் ரீஸ்டார்ட் பண்ணி கொடுங்க அப்படின்னு கேட்குறீங்க. சேம் பாலிசி. ஸோ ஆன் 2028 the insurance company is reinstating your policy. Now the contestability period will restart. It is not from 2020 to 2023. ஒரு பாலிசி லேப்ஸ் ஆகிட்டு நீங்கள் ரீஸ்டேட் பண்ணுறீங்கன்னா அந்த ரீஇன்ஸ்டேட் பண்ணுற டேட்லேருந்து 3 years ஸ்டார்ட் ஆகும். ஸோ நவ் ஃப்ரம் 2028 to 2031 the policy can be contestable again. So this is the reinstatement and revival policy under section 45. Any questions so far? Okay, great. We'll see about maturity claim. Maturity claim also straightforward. Okay. So policy matures on a maturity date. You are going to pay the sum assured plus all the bonuses. 10 lakh is sum assured means plus 1 lakh bonus vandirukuna, 10 plus 1 lakh, 11 lakhs, they will pay it out. Okay. So insurance company also will give a message or email or letter to you that your policy has matured or going to mature. Please come and claim your amount. Like that they will say. So what are the documents required? Simple claim form or discharge form, original policy document, your proof of age if already not admitted, means like you have not submitted any age of proof before, you need to take it. Otherwise only bank account is enough. So this is about maturity benefit. We'll see about survival claim benefit. Survival is we have seen about term policy. This is survival policy. Endowment, we call it as endowment. So endowment na enna, if you survive for 10 years, we are going to pay the policy. That is endowment policy. So it is also applicable for money back. Okay, money back is a type of endowment policy. If you have 5 years money back for 20 years means 5 வருஷத்துக்கு ஒரு money back போட்டு, ஒரு endowment போட்டு அதை பேக் பண்ணிடுவாங்க. It's a package. So 4 policy put together, single policy. That is called money back policy. So Here also, insurer should intimate proactively. Minimal documentation is required. If sum assured is deceased before the survival, but the policy is in force, survival benefit is not paid. They are not going to pay the survival benefit. Full sum assured paid on death claim. Okay, whatever death claim, death policy, I mean, um, um, இறந்துட்டா என்னென்னலாம் தரணுமோ, it is a combination. Pure endowment இந்தியால கிடையாது, pure endowment. So it is a combination. Endowment policy will have death claim as well as survival claim. So survival claim பண்ண மாட்டாங்க, death claim மட்டும் உங்களுக்கு பண்ணிடுவோம். Okay. So claims. இப்போ IRDA has set a rules and regulation for claims also. எவ்வளோ நாள் claim பண்ணணும், எவ்வளோ நாள் claim settle பண்ணணும் அப்படின்ட்டு. So that they should strictly follow. So what is IRDA rule? For non-investigating death claim. Non-investigating death claim is this claim is if the insurance company, just give me a second. Non-investigation death claim is the 3 years after. This is non-investigating death claim. If 3 years after the claim is happening, you cannot investigate. So you need to pay the claim. That means you need to settle the claim within 30 days of claim process. If you are applying now, within 30 days, you should submit within 30 days of submission of the claim form, you should get the amount. So this is the rule. The insurance company should settle the amount. What is the claim requirement investigation if it is a contestable claim? Contestable claim is insurance company should need some time to do an investigation. So they are giving 90 days. நீங்கள் என்ன வேணாலும் பண்ணுங்க, ஆனால் உங்கள் இன்வெஸ்டிகேஷனை 90 டேஸில் முடிச்சுட்டு ஒன்று செட்டில் பண்ண முடியும் இல்லை முடியாதுன்றதை யூ ஷுட் பி வெரி கிளியர்லி சே. If the investigation is going beyond this, then they should pay, insurance company should pay the interest on the claim amount. 10 லட்ச ரூபானா அதுக்கு ஒரு இன்ட்ரெஸ்ட் போட்டு 5% 6% இன்ட்ரெஸ்ட் போட்டு you need to give after whatever days you are extending, after 30 days, after 90 days. So this is the rule. Then we have claim repudiation. Claim repudiation is claim denial. If you are denying a claim, you must communicate the clear reason clearly in writing to the claimant. இதனால நான் உங்க claim வந்து decline பண்றேன் அப்படின்ட்டு clear-ஆ சொல்லணும். So this is the claim repudiation. So 3 items: non-investigation claim 30 days, investigation claim 90 days. If it is going beyond 90 days, you need to pay the amount, claim amount with interest. Claim repudiation or denial, you should be communicating clearly in writing. So this is the rule about claim settlement timelines. That's all from this chapter. Do you have any questions?